Investors versus Elliott wave gurus. Investors versus Elliott wave gurus. Who will win? Today we want to discuss, the competition between investors and Elliott waves guru. The financial instrument that we're going to look at is Fossil Incorporation, EPIC FOSL, Foxtrot Oscar Sierra Lima. This is a Russell 1000 components. And we want to compare the activity of investors in the financial markets to the activity of Elliott wave gurus in the financial markets. Alright, so first thing first, who is an investor? So if you are in the financial market, you want to understand other market participants. So we have speculative traders, we have day traders, we have swing traders, position traders, we have investors, a different type of market participant. So a speculative trader is a scalper concerning it all on the trading on the short term of the short term, lower time frames, short term of the short term time frames, and then we have the day traders that want to bag their profit by the end of the day. Also short term traders, their time limit is 1 day. The trading session, when a market opens until the end of the market. This is a typical day traders, scalpers from the beginning of one candlestick bar to the closing of one candlestick bar. A scalper may trade many times during one candlestick bar on the hourly chart. So short term of the short term. Then we have swing traders that are medium term traders, can hold their position for 5 days. Then we have position traders that are also medium-term traders that can hold their position from 1 week, 2 months, a year or more. And then we have the investors. The investors are long-term market participants that do not care about the short-term fluctuation. They do care about the medium to long-term. So they are in the market from medium to long-term. So an investor can open a position for 3 years, 5 years, even 10 years. So now in this tutorial we want to compare the investors' activity to the Elliott wave gurus. Now, who is an Elliott wave guru? The Elliott wave guru is somebody who has learned to master the Elliott wave theory and is applying it in real time to forecast the financial market, to predict the financial market, to pinpoint reversals in the financial market. These are So this is an Elliott wave guru. So all the decisions that this Elliott wave guru will make will be based on the Elliott wave theory, using the wave patterns, to buy and sell stock, currencies, futures in the financial markets. So this chart that we are looking at today, which is Fossil Incorporation, we are the monthly chart. There is something very interesting that I want to share with you, because we can see clearly the activity of the investors and the activity of this Elliott wave gurus. Now, I'm not talking about the dodgy Elliott wave gurus. We are talking about, the expert Elliott wave guru, the real Elliott wave gurus that are not looking at the chart but are looking inside the chart, analyzing the internal waves and the wave pattern like a nigger, so to speak. So it's very interesting. There's a clash here between the investors and the Elliott wave guru. I can assure you that in most cases, the Elliott wave guru will win and the investor will lose. So what can we say at this point in time to the investors? when we are talking about investors, we have what we call highly sophisticated investors, all right, and ordinary investors. So if you are an ordinary investor, all right, you are doing your own thing in the financial market, probably it's working for you. If you are still in the market for many years, it means that you know something and you are hanging on to it and it's working with you for you, all right? But the area wave guru are too smart to compete with. But when we are talking about sophisticated, okay, investors, those are investors that are very smart investors. So they were ordinary investors before, but they have discovered other things in the financial market, and they combine what they know with what is happening in the financial market. So a sophisticated investor will apply, for instance, Fibonacci, will also apply Elliott wave, and will also apply, okay, the fundamental analysis. Generally speaking, an investor is a fundamental trader, a fundamental market participant. He or she will look at the fundamentals and Google Finance to make, okay, smart decision. One example of a fundamental investor is Warren Buffett, who will use, okay, the net assets, all right, to determine whether a stock is oversold. Though they have more market share, they are gaining more market share, to know that this stock is oversold and that stock is now cheap, and he will buy at a low price, expecting the price to go up. But an ordinary investor can become highly sophisticated when that investor starts using, okay, or applying the same strategy like Elliott wave gurus. In fact, what I would recommend to ordinary investor is this. So if you are an ordinary investor, I highly recommend, if you don't know about the Elliott wave theory, or the fractal pattern, or the Fibonacci extension, or anything about the technical analysis, you can outsource that, okay, service. So another person may provide that service for you, all right? And you can use it together, so somebody may do the wave analysis for you and say to you, no, this is the best time to time the market. So if you are an ordinary investor, you do your homework, you say, okay, I want to buy this stock. Then you outsource, okay, the wave analysis. So an Elliott wave guru may provide that service for you, and then you may combine that to time the market carefully. Because the problem for ordinary investors is that they are coming into the market, they know that the stock should go up, but they are buying prematurely, so they buy too early, or they buy too late, and they get into trouble, all right? And they lose a lot of money. And those investors very often complain about the bearish traders. So the bearish traders are destroying the market. The financial crisis of 2008 is all down to, okay, sellers. Those who are shorting the stock are creating problem in the market. But no, it's just because those investors do not know anything about the Elliott wave gurus' activity in the market. So they are buying, so they look at the fundamentals. Usually, you see this stock when the correction has begun here. If you check the fundamental, this fundamental will be solid. Everything looks rosy. The stock may pass the Google acid test, all right? They may be creating value for their shareholders, but technically that stock is due for correction. Why? Because there is a cycle. Remember, as an investor, in order to become a sophisticated investor, one should also pay attention to market cycles and Elliott wave cycles. And the Elliott wave gurus knows that. All right? So usually ordinary investors will buy. So they will come here and say, oh, this stock is going up. Everybody want to buy. The newspaper talking about it, the television talking about it. That this stock is going up. It's going to go up to $200. So they don't believe that stock should go down now because the market sentiment is bullish, the fundamentals are solid, the market, the management is competent, no question about it, but the stock is due for a correction because of the market cycle. Harvest time is due, and the stock will come back, bearish trader will sell, the stock will become cheap, and Warren Buffett will buy again at a lower price, and the price will go up again, and a new cycle will begin. All right. So on this chart, as we are discussing, all right, this subject of investor versus Elliott wave gurus, all right. An Elliott wave guru is a technical trader that is using the wave principle alone, Elliott wave cycle, wave patterns, to determine the best time to buy and to sell a financial instrument. So at 24 Elliott wave, we say to traders that, okay, from stochasticMACD.com, we are talking about technical analysis, how to use MACD, stochastic, general technical analysis. But the next step is to 24ElliottWave.com, which is about Elliott wave theory. All right? At Day Pro Traders, we are talking about Fibonacci and core value trading, okay, in order to become a fully fledged, okay, a market participant. So you don't get fooled by anybody else, but you can see clearly what is happening. So you don't buy here when the price is due to go down, all right? And you do not sell, okay, during the third bullish Elliott wave, because the stochastic is overbought and the RSI is overbought. But we are in the third Elliott wave, resistance will be broken, and you don't want to sell. On the other hand, all right, when we are in the third bearish wave, all right, the stochastic may be oversold on the weekly, monthly, yearly chart, and you'll be saying that it's oversold. Can't you see it's oversold, George? Buy. But no, we are in the third bearish wave. You don't want to buy. You don't want to buy at all. All right? So this is about investors versus Elliott wave gurus. So on this chart, something very interesting is happening here. Look at the surge in trading volume. This is the competition between the Elliott wave gurus and versus investors and dodgy Elliott wave gurus. So there are smart Elliott wave gurus out there, and there are crazy, useless. Okay, can we use that word? Okay, if they are making money, they are not useless. Okay, they are making a lot of money, they are not useless. Okay, well, now you get the point. Because I don't like to criticize other Elliott wave traders, because myself, I don't want anybody, okay, to challenge my wave count. I'll say, okay, criticize it, but I'll say to you, this is my wave count, okay? So look at this. The average volume for this stock, okay, pay attention to the line that I'm drawing on the volume bar, okay, from mid-2012, okay, up to the up to October 2015, the average volume was around 20 million shares being transacted in Fossil Incorporation. This is the average volume, 20 million shares. There was a bit of pop here, but look, somewhere here, look carefully, somewhere here, in November 2015, all right. This is what we are talking about, investors versus Elliott wave guru. November 2015, remember that it's November, not December even, November. We see this surge in trading volume. Look, from the 20 million share being transacted, it went up more than 60 million share. So from 20 million, we tripled the trading volume. You can't, if you are trading stock and you don't pay attention to surge in trading volume, you shouldn't be trading stock at all. Now feel free to quote me on that or to criticize me for that. That's okay with me. Why? Because it's so important to be able to analyze the volume bar. By the way, if you want to learn to master the volume bar, go subscribe to Day Pro Traders right now. Check that channel, Day Pro Traders, and subscribe right now and watch. There is a playlist about stock volume analysis. All right, check it out. So there is this surge 3 times the trading activity. Smart investor, Elliott wave guru, will pay attention also to the surge in trading volume here. So something is going on. Why suddenly people want this stock so much? Now the next question, are they selling or are they buying? Subscribe to dayprotrader.com YouTube channel, and you understand the surge, how to trade the surge in trading volume or volume spike. Here it is. So why we have this surge in trading volume? Remember the topic, investors versus Elliott wave gurus. So here the investor come in and bought the stock when the price was near, okay, the moving average 200, this is the blue tick line of the, oh, here it is. Understand, so you want to understand how some investors are in trading. Majority of them are using moving averages. Really? Yes, my friend. They are just using moving average 50 and 200 to come into the market. So when the moving average 200 crosses above the moving average, moving average 50 goes above moving average 200, call it a golden cross. If it is below it, they want to sell. But look carefully. This is another matter that I discussed in other video at Day Pro Traders and also stock 24 Stock Trader YouTube channel. Okay, for free. All right. So now, so moving average 50 is above the moving average 200. Those investors see that this stock went down all the way to the moving average 200. What I'm going to do, I'm going to move this vertical line to this candlestick bar when we have the surge in trading volume, and I will color it into, okay, green. All right. Pay attention to the green vertical line because I want to change my time frame because we're on the monthly chart. That's 4 candlestick bar on the weekly chart. Okay, you see this volume bar. Let's go to the weekly chart. Investors versus Elliott wave gurus. Now, so you can see here, those are the candle 1, 2, 3, 4. I think it's from here. In fact, 1, 2, 3, 4. Okay, that's just the end of that candle. But we are now on the weekly chart. Is 4 candles. 1, 2, 3, 4. So this particular week, look, that's where we have the surge in trading volume. This one. All right, you want to know exactly which week? It's in November. Okay. Okay, November 13, week of November 13, 2015. They came in and they loaded. They are buying. Why? Because on the monthly chart, the moving average 50 is above the moving average 200, and the price retesting the moving average 200. So they say that this stock is oversold. It's oversold to a certain degree. Theoretically speaking, where after a trending fast and a correction, the price will pull back to 78% Fibonacci retracement level of the prior trend. Let's apply Fibonacci extension. I want you to understand what's going on in the financial market so you also can decide, start making better decisions. So this is the prior trend from the peak line to here. What is the 78%? I don't know. The Fibonacci number, in fact, is 78.6%. But I always use, all right, 78% exactly. And it works beautifully. And I recommend to traders to use exactly 78% instead of 78.6%. Here it is. Which color should I use now? I'm running out of ocean. I use pink already. Let's use turquoise, okay? Here it is. This is the 78% Fibonacci retracement level of the prior trend that started here. 1, 2, 3, 4, 5 move up, followed by a double retracement, in 5 multiple retracement. And price is now here. You remember this level, okay? We are now on the monthly chart. The price retesting the moving average 200, and also is at a 78% Fibonacci retracement level. You see that very often, and I've already talked about it, about how to combine the wave principle and the moving average 200. If you are an Elliott wave guru, you should know this, all right? So here it is, moving average 200, 78% Fibonacci retracement level of the prior trend, also confirming to me that my wave count here is valid, because instead of counting from here, it makes, you see, everything add up nicely, beautiful. We can use this also to validate our wave count, all right? So now the investor came in and loaded here, bought the stock here. But as I explained to trader this morning when I was recording that video, that I titled a very, 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 very important video, how to avoid Elliott wave analysis mistakes. Watch it, rewatch it, really watch it, and rewatch it. How to avoid Elliott wave analysis mistakes. With a pint of beer or wine or whiskey, chill out and watch the full length of that video step by step. If there's something you do not understand, put a comment in the comment section for that video, how to avoid Elliott wave analysis mistakes. So investor came in, they see that, oh, this stock is oversold, First, because it's at a 78% Fibonacci retracement level. After a bullish trend, a correction brought the price to 78%. In the book of investors, that stock is theoretically oversold. They will now go and do Google acid test, check the fundamental, the financial, the cash flow, the management, and other things. All right? So they bought it. All right? They bought it. That's what we have. That's surge in trade volume. But in the mind of Elliott gurus, they were just laughing. When they see a surge in trade volume, they know that investors are loading it here. But then the Elliott guru check their chart. So what did I say to you? The Elliott guru do not look at the chart. They look inside the chart. What do I mean? They look at the internal wave. So they go around the Elliott gurus and start seeing, which I talked about already. 2 videos I recommend to traders to watch. How to avoid Elliott wave analysis mistake. The next video that you must watch, how to identify a complex correction pattern like a genius, in that order. So first video, how to avoid Elliott wave analysis mistakes. Second video, how to identify a complex flat correction pattern like a genius. Before investors versus Elliott wave gurus. Because it's the same stock we're analyzing. So now investor came in and bought it here. But another mistake that I need to clarify that the investor make here, which I can help them with, is that if you are an investor and you are not, okay, a sophisticated investor or a smart investor or intelligent investor, I hate to use the word intelligent. It's like we are calling them stupid. They are not stupid, all right? So some traders use the word intelligent investors. I prefer smart investors. I prefer sophisticated investors. All right. So they bought it here. All right. But they bought it at the wrong time also. Though they were correct about the 78%. They were correct about the moving average 200. That's okay. But there are more. If you are an investor, take it from me. Do not buy in November. That's the worst time to buy and hold. Now, you can quote me on that, and I'm happy about it. Put my name, say, George Beaulieu says that investors should not buy in November. All right? Why? Okay, and I can explain it to you. Because a candlestick bar is not closed. The yearly candlestick bar is about to close. All right? So technical traders know that if you want to enter a trade, wait for a candlestick bar to close, hourly or 2 hours, all right, or 4-hour candle to close before you come into the market. We know that, or 30-minute candle to close, all right? They know that, all right? So we use the first 30 minutes if you are day trading, all right, live day trading. You see I do it many times, okay? We wait for a candle to close. So to buy in November, do not do that, okay? If you are an investor, do not do that. I can tell you now, the smartest, the sophisticated investor buy in February. Why? Because in February we have the first long-term equilibrium price level. Do we? Yes, we do. Don't buy in November. You do your homework. You do your verification. You want to buy with your pension fund, your blah, blah, blah. Don't buy in November because it's the end of the year, because the stock is cheap. Wait, in February, around mid-February, check again. If it's still good, buy. If the market. So I also recorded a video yesterday, which I want to talk about to investors, all right? That video is very important. Stay with me. I'm looking for it. I'll find it in a minute. Okay, that video, I post it. I will be posting that video. It's not yet posted. I will be posting that video at 24 Stock Trader YouTube channel. Remember, 24 Stock Trader YouTube channel. I'll be posting that video there. I'll remember to put a link also below this video so you may click on it and go to that channel. The video that we are talking about is this: how an investor buys a stock precisely. Remember that, how an investor buys a stock precisely. Okay? All right? Check that video if you're an investor. Okay? All right? How an investor buys a stock precisely at 24 Stock Trader YouTube channel. You can YouTube search it and you'll see it. If it's from 24 Stock Trader YouTube channel, watch it. Okay? and you will open your eyes and you start seeing clearly like an eagle. All right. So here it is. So you don't buy in November. Clarify. You buy in February. Okay. Good. But it doesn't mean that you always buy in February. It means that the best time to buy is usually in February. Okay, so though the investors were loading in here, triple their trading volume, buying because the price started moving over 200, moving over 50 is a bull, moving over 200, and the price pulled back near the moving over 200 is oversold. It's also at 78%. Theoretically speaking, it's oversold. They will do their fundamental analysis, everything aligned carefully. Yes, they want to buy, but they time the market wrongly. The area wave gurus, on the other hand, were looking at the internal wave, so they count first wave, second wave, third wave, fourth wave, fifth wave. Double retracement, 1, 2, 3, 1, 2, 3. So now instead of a 1, 2, 3, 5, 5 move down, we have a sharp move down. The area wave gurus know that this is a distortion to a certain degree. One long candlestick bar is a distortion to a certain degree. They also know that a high volatility has taken place in that long candlestick bar. They also understand that long candlestick bar, high volatility is usually followed by a low volatility, possible reversal, and a distortion is likely to be corrected. Here it is, the correction. So the area wave gurus go 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, a double retracement, sharp correction, another move. So this is a multiple retracement. So 1, 2, 3, 4, 5 move, a retracement, another retracement, a retracement, another retracement, 4-time retracement. Now the area wave gurus know that this is a complex, a flat correction. You see now how to identify a complex flat correction pattern like a genius. Check that video out. So the area wave gurus know that we have a complex flat correction that is in place. So they are expecting this move 1, 2, 3, 4, 5. But the investor came in. Look where the investor bought it. They bought it here. When the area wave guru was still saying 1, 2, 3. And the area wave gurus knows that this stock will go back up a bit and it will go back down, which is happening now. This is about investors versus area wave guru. I highly recommend to all investors, all traders, go and subscribe to 24 Area Wave YouTube channel. Go and subscribe to our website. Learn about the area wave theory, area wave principle. If you do not want to outsource that service from the area wave gurus, please do not contact me because I don't provide those services. I'm busy. I promise traders and investors that I will share everything that I know about area wave for free at 24 Elliott Wave YouTube channel. All I ask from you guys is to put your comment and question in the comment section so I may continue to clarify this important subject about the wave principle. Our objective is to simplify the wave principle without diluting it, okay? So you see now, so investors, though they know that the stock is oversold, they time the market wrongly. This is the challenge. Investors are losing money sometimes just because they are not timing the market correctly. So that's why sophisticated investors will outsource that service, so they may contact area wave providers that will do the forecast for them. They will say, so if you contact an area wave guru, he will tell you, yes, but it's too early, my friend. You shouldn't buy now. All right? You shouldn't buy now. You should wait. You shouldn't buy in November. All right? Best time in February. So look, so here it is. Look carefully here. Here it is. So you look carefully. So did you see that there is some buying activity here? This candle here. So this is what? This is the month of November. Are we on the month? Yeah, this is the month of November. It's the month of December. This is January. Here it is, February. There's a bit of pop. Some people bought it here. Once again, though those investors were right here, they bought it, which is in February. Again, see this volume here? They bought it in February, but again, be too early. The area where gurus know that it will go a little bit up, but if you don't know, you buy a hold, you'll be wondering. Sometimes investor will buy. So some investor who came in here, they bought it, all right? So they bought it now. So they see, okay, it's still going down. I need to come out. So they take a big loss. They say, oh, this stock it's not going anywhere. It's not going to go up. So now the area where gurus are waiting. Once the fifth move here is completed, the area where guru will now go. The smart area where guru will combine now the area where principle with the fundamental analysis after the correction is completed. And we'll be expecting this stock to start going up if the market is also bullish. So you do not, another thing I need to say to an investors, if for instance, all right, it's getting a bit longer and longer now. Well, I need to share with you, if you want to buy stock, okay, you are not buying the stock alone. What you are buying first is the market. So you want to check the S&P 500. Is it bullish? Is it about to start a correction? If the S&P 500 is about to become bearish, it's a wrong time to buy, though the stock is oversold, like you see here. If everything, even for some area with gurus, all right, you count your way, the part is completed, you want to buy, but it's the market itself, okay, bullish. Are you a short-term trader? If you are a day trader, you can play with it. If you are a swing trader, maybe for a few days. But for an investor, you want to time it correctly. And that's why I recommend to investors to check that video that I was talking about earlier on, all right, how an investor buy a stock precisely. This is the end of this tutorial about investors versus area wave gurus. In most cases, the area wave gurus will win. It's usually 3-0, or if you call it as a football match, the area wave guru will score 3, and all right, the investor will score 0, because the investor may buy too early, and sometimes they will think that the stock they are losing money, so they will come out taking a big loss before the stock will start doing exactly what they are expecting. All right, or some people may sell too early, okay, and they will quickly take a big loss, only to see later on that the price is going down. Why the area where guru keep their eyes on the price without blinking, looking at internal way in order to pinpoint the best time to buy exactly at the right price and also at the right time. So the reason why the area where gurus are winning is because they do not think only about the best place, but they think of the best place and also the best time. Time in the market is the most challenging for any market participant. All right. So the investors are talking about value, the price that they want to buy, but they need to combine that with the best time one should buy. Combining the wave principle and the fundamental analysis will make you a sophisticated investor. Sophisticated investors use the area wave principle, the fractal pattern, Fibonacci, technical analysis, plus the fundamental. Remember that investors generally are fundamental traders. Most of them are using a moving average 50 and a moving average 200 and a 78% Fibonacci retracement level. I hope you have learned something from this video also, and will put it into use, okay, to improve your investing and also to become, okay, an area wave guru. We are the TSTW24 traders talking about investors versus area wave gurus. Who will win? Happy trading to you all, and speak to you soon.